What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had yet again another red day in the markets. However, we had some interesting divergences that took place in today's trading session. I will let you guys know in just a second. Russell 2000 goes down today 0.23%, Nasdaq goes down 0.95%, Dow Jones goes down 0.34%, and the S&P 500 went down 0.43%. The VIX, the volatility index, went down today 7%. With the indices going down, it is usually the other way around. So what happens over here? Did we have many more markets participants buying call options today rather than put options? Is that signaling that we might see some sort of sentiment change in the markets, at least in the short term? That's a puzzle piece that is on the table. Crude oil went also down today 2.73%, and oil, guys, was acting in a decorrelated way relative to the indices. So whenever the indices went down or have been going down during the last 2 or 3 weeks, oil has been going up. So oil today went down along with the indices. What happens over here? Is the sentiment towards oil when it comes to commodity traders and technical traders changing? Is it that oil is going to go below $100 once again? That's another puzzle piece that is on the table. Gold went up today 0.63%, and silver went up today 1.60%, which implies that we still have a fear out there and that we have a good amount of market participants buying gold and silver instead of buying stocks, instead of buying risky risk-on assets. Let's just put it that way. The 10-year Treasury yield went up today 3.23%, despite the fact that the financial sector went down today. So what happened? Why did we have another red day today in the markets? Basically, guys, because today both delegations, Russians and Ukrainians, got together in Turkey in order to keep on trying to find a peace agreement, and no good news came out from that meeting. So we still have the uncertainty of the war in Ukraine. And mind you guys, the markets are trying to price in the conflict in Ukraine. They haven't been able to do it yet, or maybe they did, we don't know. But the markets are trying to put a price on the war because it looks like the war is going to take longer than we would like it to take. Let's just put it that way. Something that is worth pointing out about today's trading session is the fact that Chinese stocks got absolutely killed today, guys, across the board. No mercy for Chinese stocks today. Baba, NIO, Tencent, JD.com, Pinduoduo, and so forth, all of those stocks got absolutely killed. So it turns out to be that this morning, earlier today, the Chinese government said that they will retaliate if China happens to be negatively affected by the Russian sanctions. So more geopolitical tensions over here between China, the US, the war on Ukraine, and so forth. Today we had the Cpi Data report coming out, the Cpi Data report of February. It came out as expected, reflecting an increase year over year of 7.9% and month over month of 0.8%. So that's kind of good news for the markets because it didn't come out way hotter than expected, which is honestly, guys, what I was waiting for. And we saw a little of decrease when it comes to auto price. Get this, guys. Prices of used cars have gone up 42% in the last 12 months. Something absolutely unsustainable, at least from where I sit. So I'm thinking, and keep in mind, that on March 16, we're going to have the next Federal Open Market Committee. Since this was the very last important economic data that the Federal Reserve is getting, I think that the first interest rate hike that is going to be announced on March 16 is going to be of 0.25%, which is something that is already priced in by the markets. If we take a look at the sectors, obviously, energy, guys, it went up today 3.06%, despite the fact that oil went down. That's another, as I have been saying, we had some divergences. We had a bunch of interesting divergences that occurred in today's trading session. So energy goes up today 3.06%, and consumer discretionary, which is an expensive sector, which is a higher multiple sector, went up today 0.71%. Guess why, guys? Because of Amazon. Amazon announced yesterday a 20-for-1 stock split, and Amazon was actually the only big tech stock that ended up going up today. The Teslas of the world, the Googles of the world, the Apples of the world, and the Microsofts of the world, and so forth, went down today. The most important sector of the markets, obviously tech, goes down today 1.75%, and the financial sector goes down today 0.84%, despite the fact that the 10-year Treasury yield went up. Another interesting divergence that we saw in today's trading session. And as I have always told you guys, whenever these two sectors go down, then we are very likely to have a red day across the board when it comes to the indices. When it comes to the trades that I took in today's trading session, I had another very active trading session today. Boeing, guys, I took a day trade with a call option. This morning, I purchased the $175 call that expires on June 17, and I paid $1,835, and I ended up closing this trade being paid $2,000. I ended up making over here $165. I also, let me show you over here, took a day trade on Amazon. So I purchased this morning 2 shares of Amazon pre-market at $2,889. I paid $5,779, and I closed this trade like 30 minutes before the closing bell rang, and I was paid $5,933. I ended up making over here $154, and I also closed 2 covered calls, guys. Let me show you over here. The first one was with AMD, Advanced Micro Devices, and in the case of AMD, I have been selling covered calls left and right over here, guys. So on March 8th, 2 days ago, I sold a $115 call that expires on April 21st of 2023. I was paid $1,930, and today I decided to buy back this covered call, and I paid $1,850. I made $80 over here, and I also bought back a covered call of DraftKings. And in the case of DraftKings, on February 23rd, I sold 4 covered calls that expire on, this is January of next year, of 2023. I was paid way back then $520, and today I decided to buy back these 4 contracts, and I paid $380. I ended up making over here $140. So, long story short, I ended up making today $540. I had a very solid day. I have absolutely nothing to complain about today's trading session. Russell 2000, guys, this is not the S&P 500. I wanted to talk in this video about the Russell 2000 and why. You guys know that this is my favorite market leading indicator. The Russell 2000 went down today 0.23%, and it closed today's trading session at 2,011 points. The Russell, guys, out of all of the major indices, is the one that looks the best by a long shot. And over here, we have both the bulls and the bears being able to make some arguments. The bulls would argue that the Russell 2000 already bottomed out, obviously, when it hit 1,900 points on 2 occasions, actually, back on February 23rd and also back on January 27th, and that the Russell is trading inside a horizontal channel, and that the bulls are gathering momentum in order to take on this 50 SMA at 20, this 50 SMA on the 4-hour chart at 2,021 points, and then maybe they might be able to fill the next gap up to 2,080 points, and if the bulls happen to burst above the upper line of this horizontal channel at 2080 points, they might be able to fill the other gap up to the 100-day moving average at 2100. I'm sorry, guys, 2177 points. However, I am going to use my snipping tool over here. The bears would argue, in the case of the Russell, guys, that we have a bear flag over here. I'm going to try to draw it, guys. This could be a bear flag. Take a look. So the bears would say that if this bear flag happens to be completed, so if the bears can take on 1900 points, we could see another leg down in the case of the Russell 2000. So what is going to happen over here? Is this bear flag going to be completed? And therefore, are we going to see another leg down below 1900 points in the case of the Russell 2000? Or can we see the Russell bursting above 2080 points and filling the next gap up to the 100-day moving average at 2176 points? If the second happens to occur, and since the Russell 2000 is the favorite market leading indicator for a lot of markets participants out there, this could be signaling that the corrective process that is going on as of now might be about to end. And now let's go ahead and take a look quickly at the S&P 500. Today we are going to go over the earnings reports of Blink Charging, DocuSign, Rivian, and Oracle. We have a lot to cover in this video. S&P 500 goes down today 0.43%, and it closed today's trading session at 4,259 points. Okay, obviously, guys, very ugly looking chart. The S&P is below all the moving averages, clear downtrend. However, the bears need to take on 4,160 points as soon as possible. They have a very specific task to carry out. If the bears are unable to take on 4166, then this might be a sign that the bulls of the S&P are starting to gather in momentum in order to make another push higher and maybe being able to reconquer the 50 SMA on the 4-hour chart at 4,328 points. This is also a previous area of support back from October 13 of last year. So yes, the bears are in absolute control of the S&P 500, but they have a homework to do as soon as possible. The RSI of the S&P is at 46 points. This implies that from a technical standpoint, the S&P 500 can go either way. NASDAQ 100. So what happens over here? The NASDAQ NDX goes down today 1.10%, and it closed today's trading session at 13,590 points. Obviously, guys, the bears are in absolute control of the NDX. However, they also have an important task to carry out. 13,400 points happens to be a previous area of support back from May of last year. They need to take on 13,400 points and take the NASDAQ 100 down to 13,080 points, a previous area of support back from February 23rd. The bears have to prevent the bulls from consolidating slightly above 13,400 points, because in that case, that might be a sign, and as I just said in the case of the S&P 500, that the bulls of the NDX are gathering momentum in order to make another push higher and take on this 50 SMA on the 4-hour chart at 13,900 points. We are also talking about a former area of support back from late January. So, yes, this is a very ugly looking chart. The bears are in absolute control, but they have work to do. They shouldn't let the bulls gather momentum slightly above 30,400 points. And now let's go ahead and take a look at DocuSign, guys, which should have already reported earnings. What is Ooh. They did report earnings, guys. DocuSign goes down today 4.25% during regular trading hours, and it closed today's trading session at $93.88, and DocuSign is getting killed after hours, guys. No mercy for Cathie Wood at all. So
DocuSign is down 20% after hours. So did they drop the ball? Wow. In such a terrible way. Let's see what happens over here, guys. So EPS came in at 48 cents, beating the estimate of 47 cents. Sales came in at $580 million, beating the estimate of $561 million. Come on, guys. They beat across the board. I think, I guess that guidance was very weak. So, DocuSign sees Q1 sales from $579 million up to $583 million versus $594 million estimate. Okay, so they missed on guidance when it comes to sales, and full year 2023 sales should be, according to DocuSign, between $2.47 billion up to $2.48 billion versus $2.61 billion estimate. So they missed on guidance, but they missed on EPS and revenue. This was a decent earnings report, but guys, if the companies that are beating on earnings across the board, top and bottom line, guidance, are selling off 10 and 15%, so what can we expect about DocuSign missing on guidance? So Docu is trading after hours at $77. This is a extremely ugly looking chart. We can make the case that Docu is a bit oversold on the 4-hour chart with its RSI at 19 points. So what could be the next foreseeable support for Docu, guys? Let me see. Wow, check this out. I am going to draw a line over here. So the next foreseeable support for Docu, guys, would be at $63. We are talking about a former area of support back from March of 2020. If tomorrow, this could be a bounce back up trade, guys, because if Docu keeps on dropping and pays a quick visit down to $64, and taking into account that on the 3-year chart, on the weekly chart, we can see the RSI of Docu at 23 points. So the stock of this company is severely oversold. So maybe a quick trade down to a quick drop down to $64 could give rise, guys, to a bounce from a previous area of support back from 2 years ago, based on a severe, let's say, oversold condition. So watch out for Docu, guys. I think that the stock of this company might run into buyers at around $64, and I think that this was an acceptable earnings report but for this market, guys, no earnings report is enough. Now let's go ahead and take a look at Rivian, which is going to be the second stock of this video. And Rivian, this is the weekly chart. Let me pull up the 4-hour chart. Down after hours. Rivian goes down today 6.35% during regular trading hours, and it closed today's trading session at $41.16. Let me pull up here the 1-day, 1-minute chart, and Rivian is down a lot. And obviously, guys, this is a non-profitable company. This is a company that is at an early stage of development, so we cannot expect nothing spectacular when it comes to revenue, profit, and so forth. And when it comes to these kind of companies that are still in a speculative stage, the most important is obviously guidance. So Rivian is down after hours 12%. So let's see what happened over here in the case of Rivian. Okay, we have a lot of information available. Let me see. Okay, 4 p.m. adjust. Okay, we have guidance, which is fine. Okay, Rivian Automotive has produced 2,425 vehicles since the start of production. Okay, nothing spectacular, obviously. NIO makes 10,000 vehicles a month, and it is trading 80% of the highs. So Rivian Q4 adjusted EBITDA loss came in at $1.10 billion, and versus adjusted EBITDA loss of $341 million in the same quarter last year. So they are burning way more money relative to Q4 of 2020, which is normal. This is a company that is investing money in order to try to ramp up production. Okay, EPS came in, negative EPS, obviously, guys. This is a non-profitable company, came in at $2.43, missing the estimate by a long shot of $1.97, and sales came in at $54 million, missing the estimate of $60 million. This was a horrible earnings report across the board, guys. Do we have any guidance when it comes to Vehicle production. Okay, Rivian Automotive will have sufficient parts and materials to produce 25,000 vehicles across R1 and RCV platforms in 2022. So they are planning on selling 25,000 vehicles in 2022. And this company has Rivian Automotive ended Q4 with $18.42 billion in cash and cash equivalents and restricted cash. This is a decent amount of cash. This company has enough money in order to ramp up production. I remember the earnings report of Workers, guys. Workers has $242 million in cash. Oh boy. Okay, I have nothing to say over here, guys. Clear the trend below all the moving averages. So Rivian broke the support of $42, an area in which the stock of this company found support back on March 7. So an extremely ugly looking short. However, guys, I think that near $30 and from a long-term investment, the valuation of Rivian is going to start to look attractive, guys. And this company has a lot of money in cash. This company is being backed up by Amazon. So I think that this is going to be later on down the road a serious player in the EV space. And near $30, I am going to be doing some math in order to pick up some shares for the long term. I cannot break down this stock in order to take a short-term trade because this is an extremely ugly looking short. And now let's go ahead and take a look at Oracle, which is another stock that is reporting earnings today. Where is Oracle at? There you go. So Oracle is down after hours. Oracle went up today 0.72% during regular trading hours, and it closed today's trading session at $76.65. Let me pull up here the 1 day, 1 minute chart, and Oracle is down a lot after hours. It is down, let me see, almost 5%. So what happens over here? I'm sure that this was a decent earnings report, and the markets are killing Oracle just for the sake of it. So, where is the information? Come on, Thinkorswim. Where is it at? Okay, EPS came in at $1.13, missing the estimate of $1.18, and sales came in at $10.51 billion, beating the estimate of $10.51 billion. So they missed on EPS, but they beat on sales. Or now let's say that sales came in line, right? Okay, so where is guidance at? Because this drop should be guidance related. This drop after hours. Okay, let's see. Oracle shares are trading lower after the company reported worse than expected Q3 adjusted EPS report. So that's it. This was not. I mean, this was not a horrible miss when it comes to EPS. And I don't see any guidance over here. Let me see. Nope. No guidance, guys. I am going to owe you guys guidance because I have none. So I have to take a deeper look at this report of Oracle. And this is not a good looking chart. Oracle is trading after hours at $75. So $75 coincides with this 50 SMA on the 4-hour chart. I am going to draw a line over here. So maybe if tomorrow Oracle happens to consolidate slightly above $75, this might be a sign that the bulls are gathering momentum in order to fill the next important gap up to $80. I am going to draw another line over here. You guys know that I am improvising when it comes to stocks that are posting earnings. I don't prepare anything, obviously, previously, because anything can change depending on the earnings report. So I am improvising over here. So if Oracle happens to consolidate, as I just said, slightly above $75, that might be a sign that the bulls are gathering momentum in order to make another push higher up to $75. We are talking about a former area of support back from late January, in which case from $76 up to $75, we are looking at a 4.50% profit trade. And the last stock of this video is going to be Blink Charging. So let's see what is going on over here. Blink Charging. Okay, Blink. There you go. So Blink is down after hours. Blink goes down today 1.26% during regular trading hours, and it closed today's trading session at $25.13. Let me pull up here the 1 day, 1 minute chart. And what stocks don't go down after reporting earnings, guys? Blink is down 10%. So let me pull up here the Live News tab, and what happens over here? Okay, Q4 EPS came in. This is a negative EPS, obviously. This is a non-profitable company yet. At 45 cents, meeting the estimate of 39 cents. And adjusted EBITDA loss came in at $9.1 million versus a loss of $4.71 million in the same quarter last year. Sales came in at $7.9 million, beating the estimate of $5.43 billion. They beat on sales by a long shot, and they missed on EPS by a small margin. Let's just put it that way. Do we have guidance over here? I don't see any guidance. Nope. No guidance when it comes to Thinkorswim, right? So I still need to take a deeper look at this earnings report. It was a mixed earnings report. This is a good-looking chart, and you guys know that all of the energy-related stocks out there are doing pretty well as of now. So I am going to draw an ascending channel or an uptrending channel over here. So the uptrend is intact, and the bulls are holding as support this 50 SMA on the 4-hour chart at $23.42. I am curious about the bulls holding tomorrow $23.40 as lower support, in which case they might be gathering strength in order to make another push higher and maybe being able to fill the next gap up to 26 bucks, which happens to be an area of resistance from yesterday and also a previous area of resistance back from late February and also back from early February. So watch out for this 50 SMA, guys. $23.50 or 24 bucks, because this is an important spot, and the stock of this company seems to be reversing this horrible downtrend that you guys can see on the 4-hour chart, and it is still trading inside this uptrending channel from $23.50-ish up to $26. We are looking at an 8% profit trade. The RSI of Blink Charging is at 46 points. 45 points, very healthy from a technical standpoint. So the stock of this company is definitely going to be on the very top of my personal watch list in tomorrow's training session. And with Blink Charging, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things differently because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Monday, once again, 3 or 4 hours after the market closes. Peace out.